2012 was a dark year for the mining sector in South Africa. Last August, at Marikana platinum site, police shootings left 34 striking miners dead. The protesters were asking for higher wages. The bloodshed sparked weeks of protests across the country. It was the most important social conflict since the end of apartheid in 1994. Mining companies claimed their losses have reached 900 million euros so far. Confrontation between both parties is not yet over. Some firms, such as Harmony Gold, are still negotiating with their employees who refuse to return to work. As a consequence, mining companies are increasingly turning to more stable African countries. The world's third gold producer, Anglo Gold Ashanti, has new projects in Namibia, Tanzania, and the DRC. The company plans to reopen 2 mining sites by 2014. Meanwhile, world's leading diamond company De Beers extended its operation in Botswana and Angola. Smaller players such as African Rainbow Minerals or Lonmin want to develop their gold and copper industries in the DRC, Gabon, and Zambia. 2012 was also marked by the $33 billion merger between commodities trader Glencore and mining group Qarra. 9 months of negotiations which gave birth to the world's 4th largest mining company. With 160 billion euros in revenues and more than 130,000 employees, it's the world's top zinc producer and the 3rd copper producer. Other companies, however, are going through difficult times, like Areva. The French group operates Imurara mining sites in Niger. It is the largest open-pit uranium mine in Western Africa and the 2nd largest reserve of uranium in the world. The government of Niger wants to renegotiate the contract. Areva has been accused of lack of investment in the project. There would also be delays in the work. Operations were supposed to begin in 2014, but now the mine is set to open in 2016. In the meantime, Mali says it wants to focus on its gold reserves in an attempt to salvage its economy. Mali is believed to detain large deposits of gold in the south. Despite the ongoing conflict, most mines remain operational. Experts expect production to reach 12 tons this year. Guinea also attracts investors. Mining group Rio Tinto already operates the Simandou project. The mining site could be the biggest iron reserve in the world, with 2.4 billion tons. Production is set to start in 2015, but the site also sparks the interest of other important groups like the Chinese Bow Steel, the 2nd biggest steel producer in the world. World top copper producer Zambia continues to develop with a growth at 7%. The country managed to raise $750 million it will use to restore railway lines between Copperbelt Province and Durban Port in South Africa. Other countries bank on the mining sector to diversify their economies. Gabon, whose 50% of revenues depend on oil, wants to invest in manganese. Minerals only represent 4% of its GDP, but the country says it wants to develop this sector. Gabon also wants to rebuild a school of mines that will open by 2015. Sudan has been following the same path. President Omar al-Bashir inaugurated the country's first gold refinery. This strategy is to deal with the loss of oil revenues since the secession of South Sudan in 2011. Sudan hopes the new refinery will produce higher quality gold and bring double gold revenues. The government would have attributed exploration permits for gold and ore to more than 600 mining companies. Elsewhere in Africa, some countries embarked on the mining industry for the first time. For example, Kenya hopes to boost its economy thanks to its mineral sands deposit. The country has reserves of zircon, ilmenite, rutile, gold and iron. Many companies such as the Australian group Base Resources and the Tanzanian African Barrick Gold already have exploration permits. Finally, Cameroon joined the exclusive club of countries producing and exporting diamonds. Residents hope extraction in Mobilong Diamond Field in the east will bring social improvement. South Korea's C&K Mining should start the production in 2 years.